Hey guys, welcome back to Reserved Investments on YouTube. Today, we're going to have a serious discussion about confirmation bias and market transparency as it exists, or sometimes does not exist, especially with the latter, in the overall antiques and collectibles trade. You know, a lot of you guys reach out to me and you want to have a competent conversation about the financial markets versus that of the overall antiques and collectibles trade. And when I enter this conversation with certain individuals, either in the comment section or people who email me, I'm always cautious to do so because I don't think the average person out there understands just how regulated Wall Street is compared to the overall antiques and collectibles trade. And it kind of has to be that way because when you start to invest in stocks, bonds, mutual funds, securities, items of that nature that mainly belong on Wall Street, there are certain fundamental actions that you can take to analyze any asset. Whether you want to look at the annual report, you want to look on trade history, information on what stocks are selling at any given time throughout history, you have all that available to you at your fingertips. And it's very interesting when a lot of people reach out to me and talk about the antiques and collectibles trade, they claim that they have that same information available to them, or at least it appears so. And I have to kind of open their eyes and I have to state, I'm sorry, you do not. You are under the guise of confirmation bias. And this is why you think that the antiques and collectibles trade overall has market transparency. So before we go any further, we're going to define what confirmation bias is. Then we're going to circle back and we're going to define market transparency. Then we're going to do a little bit of analysis over comparing Wall Street and the financial markets to that of the antiques and collectibles trade. I'm going to explain to a lot of you guys out there why the antiques and collectibles trade will never have true market transparency. And this is going to be a very important video for some of you. But I do want to start with the concept of confirmation bias. For those unaware, confirmation bias is the tendency to interpret new evidence as confirmation of one's existing beliefs or theories. I'm sure you guys by now, especially with me having well over 6,000 subscribers at this point, have gone on a collecting forum, or maybe you sent a video of mine to one of your friends who's a really big collector, or maybe he's a speculator or investor, or he's just an enthusiast of some of these markets that I talk about on this channel. And you said, hey, here's this guy, Shawn, with Reserved Investments, and he's talking about how these markets work over the short term, over the long term. And I'm sure at some point, now I know this is true because I do read a lot of the comments and the emails that I get. You sent a video of mine or you talked about me on a collecting forum and somebody said, that guy doesn't know what the hell he's talking about. I wouldn't pay any attention to what he's doing on that channel, Reserved Investments. And when you dig in a little deeper, you learn that this particular person has probably been collecting some type of pop culture item, or it could be even an antique, for years, if not decades or more, and they sunk a lot of money into it. The reason why they are so against the material that I teach on this channel is due to their own confirmation bias, which again is nothing more than the tendency to interpret new evidence as confirmation of one's existing beliefs or theories. This is also why this channel, believe it or not, according to the YouTube algorithm, I have an equal number of collectors that subscribe to this channel as I do as people who are interested in finance or alternate asset investing. I'm really not making too much of an impact on a lot of the core groups that I thought I would with this channel. Instead, the algorithm is actually pulling people that more have an interest in money management, building a net worth, investing, alternate asset investing. These are the people that are starting to clamor to this particular YouTube channel. It's quite interesting. I'm more aligned at this particular point with a lot of the finance channels than I am with channels in the overall collectibles space, which is quite interesting when you break down my demographics, because there's also a lot of people that are flocking to this channel because of the articles I write through Antiques and Auction News. So this is an interesting concept. Now, this is very important because whenever you get involved in investing in any type of asset class, and I don't care if it's antiques and collectibles, I don't care if it's cryptocurrency, I don't care if it's gold, silver, commodities, mutual funds, ETFs, individual stocks, corporate bonds, whatever it is, one of the things that you really have to take a look at, you have to be self-aware enough to analyze your own confirmation bias and make sure that you really are tuned in to other criticisms, other points of view, other differing perspectives on the subject that you are either emotionally attached to or mentally focused on. And this is something that I've learned that a lot of people cannot do. You need to kind of pull yourself away from a lot of the items that you are investing in. Take a step back and reanalyze them from time to time. And unfortunately, with antiques and collectibles, there's such a strong emotional attachment that we all have to these objects. A lot of us cannot do this properly. And when we do it, it's clouded by our own judgment. Or if we do have a eureka moment where we say, you know what? Maybe that red pill Shawn guy, he's right about some of these markets. What happens? It only lasts a couple of minutes. And then rather than checking out the latest Harry Rinker article or reading an article by Wayne Jordan, what happens? You guys log back on a Facebook group or a collecting forum and somebody says, pay no attention to those people that think they know these markets. And all these lessons that I teach on this channel, all the excellent articles that some of my colleagues write in the trade, it doesn't resonate. You guys forget it and you go back to thinking, look at these asset classes. Look at these antiques and collectibles. They're going to do nothing but go up in value. These are the greatest asset classes I can invest in. That's confirmation bias. Now, let's shift gears and talk about market transparency. Because in my opinion, these two forces, these two concepts work in tandem. And I'm going to explain that in a minute. Market transparency. There's two great definitions I'm going to use to define market transparency. The first is more geared towards economics. So I'm going to give you the economic theory first, which is nothing more than, in economics, a market is transparent if much is known by many about what products and services or capital assets are available in the market, the depth of the market, what price is being paid in the market, and where is this taking place in the market. Transparency is important since it is one of the theoretical conditions required for a free market to be efficient. This is ultra important, guys, because remember, what I've taught you from day one on this channel is that overall, with few exceptions, the antiques and collectibles trade is by and large a free market. Nobody cares what you're buying or selling into this market. If you're manipulating prices, overall, nobody really cares. Now, if you get involved in dealing with certain guns, certain weapons of a collectible nature, if you get involved with the ivory trade, antique or modern, if you get involved with selling antiquities that came from the black market that may have been stolen, you are looking at markets in the overall antiques and collectibles trade that are somewhat regulated. So as long as you're not doing anything stupid, as long as you're not involved in a market where regulation already exists, by and large, the antiques and collectibles trade is completely unregulated. Now I'm going to give you a better definition of market transparency. Market transparency describes the extent to which the details of market activity are made public. Important information about a market that is typically published includes the following: last sale reports. These reports include the price, quantity, and possibly time and date of all trades as they occur. Let me read that again. Of all trades as they occur. Now, this is very important because when we talk about investing in stocks or bonds or mutual funds or ETFs, you can log on anytime Wall Street's open during the day, and you can see what your securities are worth. Meaning if you clicked the sell button at that particular point, that's how much money would get deposited in your brokerage account. All this information is open, it's readily available, and if you live in the United States like I do, it's governed by the SEC, Securities and Exchange Commission. If anybody would attempt to manipulate these markets, if anybody would get involved and try to spearhead the prices that are shown for these commodities, for these stocks, for these equities, guess what? It would be a violation of law, and they could be prosecuted to the full extent of that law. This is exactly the opposite of what happens in the antiques and collectibles trade. Now, why is this important? Well, because we have to talk about the amount of lack of transparency that exists in the antiques and collectibles trade. And this is what separates an unsophisticated investor from a sophisticated investor in the overall antiques and collectibles trade. Let me give you guys some examples. Right now, there's grading companies out there, and yes, I'm going to attack Wada Games for this example, that will not publish the census or the population reports of the items that they grade. And the Timmies, the Kimmies, and the Poindexters, who are all gravitating towards investing in these items, rather than being outspoken and saying, hey, people are paying $50,000 to $100,000 for a factory sealed graded Nintendo game. We deserve to have the information to know how many copies of those particular games are graded at present time in each subsequent grade and how many copies exist out there, what the depth of the market is. Instead of doing that, a lot of the Timmies, Kimmies, and Poindexters are protecting not only Wada Games, they're protecting the market manipulators, they're protecting the market makers, and they are playing right into the hands of a lot of these high-profile auction houses that cater to these products and these collectibles. And I don't think that they realize if they were attempting to do this on Wall Street, it would be looked down upon. Could you imagine if tomorrow the SEC put out a statement, you know what? Companies don't have to issue anything on earnings. They don't even have to put out a 10K report. For those of you that don't know what a 10K report is, a 10K report is published yearly by every publicly traded company out there today. So I'll use Iron Mountain as an example. Every year, Iron Mountain produces a 10K report. So if you're an investor in Iron Mountain and you want to look at how the company did throughout the year, you want to look at key financial data, you can get a copy of that report and you can break it down. Now, another thing that a lot of these companies do, like Iron Mountain, AT&T, every 3 months, they have earnings calls with investors where they tell you specifically how the company did, how much earnings per share the company made or lost over that particular quarter. This is vital information that investors look forward to. In the antiques and collectibles trade, we have Timmies, Kimmies, and Poindexters thinking that they are sophisticated investors, telling a lot of these companies, hey, we don't need that information. I just love The Legend of Zelda. I love Super Mario so much that I'm willing to spend 6 figures to get this particular item. And you don't even need to give me all the information relevant to making an intelligent purchase decision here. I love Mario so much that I don't care if I lose 6 figures. That's what you guys are pretty much saying. Now, if you're wondering why I'm picking on Wada Games right now, I don't have this problem with NGC. I don't have this problem with CGC. I don't have this problem with PSA. The population reports are right on their website. I can see what they graded. I can see how many copies of that particular collectible exist in such and such a grade. Now, before we spend too much time railing against some of these companies that don't release population reports, we also have to talk about auction houses. Now, by and large, I do business with a large plethora of auction houses out there in the trade. Whether I'm using my real name, whether I'm using Reserved Investments, whether I'm using a shell corporation, hate to say it, it does happen, whether I'm representing a buyer or a client of mine on the consulting side of my business. Rest assured, I do a lot of business with these companies. But one thing that I will tell you is auction companies have a fiduciary responsibility to their consignors and their investors, not their buyers, not their collectors. Now, what do I mean by that? Well, sometimes an auction company, a very well-respected auction company, again, I'm not going to pick on any auction companies directly in this statement, but make no mistake, there are auction companies out there in the trade that maybe their expertise is in traditional antiques or vintage advertising or art glass, and they decide, you know what, we have this opportunity here to get into precious metals or mineral collecting or another market that they're not really well versed in. And a consignor will come to them and they'll say, hey, you know, you guys are an auction firm. All auction firms are the same, said the little Timmy, Kimmy, and Poindexter. Can you just, even though this isn't your core bread and butter, can you consign this collection of rocks or minerals or antique artifacts or Indian arrowheads, since you have such success in vintage advertising or comic books or rare coins? And sometimes the auction company will get a little cocky and they'll go, yeah, you know what? Due to the value of this collection, we'll take this on. And the collection will go off, and a lot of the pieces will not bring substantial interest from bidders and other collectors. And as a result, the auction company will kind of forget that that auction took place, and they won't allow the final auction results to be searchable on their website. Meaning that particular pricing information, it'll just fall off the edge of the earth like it never even existed. Now, in my opinion, I understand why the auction company is doing this. They're saving face. They're saving value because obviously if collectors, investors, and speculators get privy to those results, they may say, you know what, I don't feel comfortable using this auction company at all. But overall, make no mistake, the end result of this auction company's actions are market manipulation, guys. You are not having any type of transparency into these markets as a result. Now, what else occurs in the overall antiques and collectibles trade to make these markets less transparent so that the little Timmys, Kimmys, and Poindexters can get all excited? They can downvote this video and they can send me little emails or comments in the comment section. Shawn, you don't understand how these markets work. Well, little Timmy, Kimmy, and Poindexter, let me tell you another thing that a lot of these companies do that you put your trust in to the point where they're kind of taking advantage of you. Now, we all know right now there's a lot of spectacular services that report final sale prices for certain collectibles, whether it's comic books, whether it's coins, whether it's pieces of art, whether it's traditional antiques, whether it's even vintage advertising. And one in particular that I am going to call out here because they have a great service is GP Analysis. GP Analysis does an excellent job on reporting final end prices for a lot of CGC graded comic books. But the problem is, little Timmy, Kimmy, and Poindexter Jr., they don't know how GP Analysis works. For instance, GP Analysis does not report on all auctions and dealers in the overall trade that deal with CGC graded comic books. Let me give you one such example. If you go on Comic Link and you bid on a comic book, that data is not reported to GPA because Comic Link doesn't have a relationship with GPA, meaning that information is not searchable in the GPA database. And guess what? This happens across the board with a lot of these companies, whether we're talking high-end art, whether we're talking coins, whether we're talking vintage toys. If it's a service that is known as a reporting index, and what I mean by reporting index is either a company or some type of index is used to track auction sales or dealer sales of a certain antique or collectible, it is impossible for that index to utilize all avenues of sale, meaning all auction companies and all dealers do not report solely to that index. So what I am saying to you is, if you use GPA, you must understand that you yourself, you're not getting all the facts if all you are using is GPA. And make no mistake, I am 100% behind GPA. GPA is a fantastic product, especially for what they charge each month, or if you have a yearly subscription. It is highly worth it if you are spending hundreds or thousands of dollars per year on CGC graded comic books. But the information, by and large, just due to its reporting, is inherently flawed, F-L-A-W-E-D, sorry, I'm having trouble talking tonight, in that regard, meaning it's not all the information you need to make an informed decision. And a lot of you guys are taking it like gospel. So when we look at these markets, if you're a Timmy, Kimmy, or a Poindexter Jr. watching this video, and you want to disagree, you want to thumbs down this video, and you want to say, you know what, Shawn's being unfair towards the antiques and collectibles trade. I am sorry. There is not enough market transparency in the overall trade for some of you to make money repeatedly in these markets unless you yourself are a market maker or a market manipulator, or you're doing what the smart people did during the gold rush. And I'm saving this analogy for the end because this is a perfect way to end this video. If you guys remember the gold rush in the United States, do you know what group of people made the most money during the gold rush? It was the people selling shovels to the speculators who were flocking to California trying to get their piece of the American pie, thinking that they were going to be rich and well off because they were going to hit gold in them there hills. Well, guess what group of people made the most money? The people selling you the shovels, the picks, the equipment used to mine that gold. And make no mistake, those people that were doing that, they were not panhandling the gold. They weren't touching the gold. They didn't care about it because they were busy making too much money off the Timmys, Kimmys, and the Poindexter Juniors that flocked to California and all had to buy shovels, picks, and axes to try to get that gold. Now, this is equivalent to grading companies, auction houses, and reporting indexes. The people that are making the most money right now are not the speculators, they're not the collectors, they're not the investors. They are the people selling you, little Timmy, little Kimmy, and little Poindexter Jr. They're selling you the equipment that you think you need in order to make money in these markets. Let that sink in. Thanks for watching. Let me know if you need me to do a follow-up to this particular video. And above all, have a great night. Thanks, guys.